Hey, everybody, we are going to talk about what I am putting my own money into these days, what I have the most of my money into. I have about 40 stocks in my portfolio. I'm going to talk about the top 10 and why I own them. We're going to dive in just a second. Before we do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. I'll put that link in the video description. And please hit the subscribe button if you don't already. So I'm going to go ahead and share my screen real quick. All right, so we'll go ahead and start right with my number 10 holding, and that is Howard Hughes Holdings. It's a company I've owned for a while. It's been in the news a lot lately because Bill Ackman recently injected some money into it with the purpose of creating a so-called modern-day Berkshire Hathaway. That was not the thesis when I bought this stock. It's a developer of master plan communities, and I think there's a lot of value in that business. I think the stock trades for a lot less than the intrinsic value of what it already owns. They did a very conservative valuation estimate and found that it should be worth well over $100 a share now, just the real estate holdings. The new strategy does add optionality. I don't really, that's not the big part of my thesis. I'm curious to see how it plays out. But for now, this is my number 10 investment. Moving on to number 9, one that I've owned for a long time. Bank of America, ticker symbol is BAC. The market cap is about $332 billion. It is a dividend paying stock. It is one of the largest banks in the U.S. I bought this shortly after the financial crisis. I've added to it several times since. Great management, attractive valuation, and they've done a really good job of embracing technology compared to the other big banks. So not too much more to say about that one. Number 8 is Dreamfinders Homes. By the way, my numbers 10 through 6 here are relatively similar in position size. I should point that out. So the order of those will depend on what day you're talking about, but they're all pretty close in size. Number 8 is Dreamfinders Homes. Ticker symbol is DFH. This one has actually gone down quite a bit recently. This was a top 5 holding for me. The real estate market's not been great lately. Interest rates have been persistently high. This is a home builder. They're concentrated mostly in the southeastern United States. They're based in Jacksonville, operations in Florida, the Carolinas, Georgia, and also in Texas and Colorado. They're an asset-light home builder. They don't own a lot of land until they're ready to build a house. They operate in very attractive markets with above average job and wage growth. There's a lot of pent up demand for homes, and their focus on first time home buyers is a pretty attractive quality. So that is my number 8. Moving on to number 7 is a company called Kinsale Capital Group, KNSL. They are a specialty insurance company. They do not write typical auto or homeowners insurance. Um, they they like focus on high risk businesses, things that are difficult to assess, things like that. They're the only pure play insurer in the specialty insurance or the excess and surplus lines, as it's known in the market. Excellent. They're very, very profitable for an insurance company in terms of underwriting and investments. The investment portfolio is scaling rapidly, and they have excellent business momentum. So that's number 7. Moving to number 6 is SoFi, ticker symbol SOFI. They are the financial technology company. They offer an app-based platform that has checking accounts, savings accounts, investment accounts. They have a lending platform, a credit card. There's a lot of different things they do. So SoFi aims to essentially be a banking replacement platform. They have excellent growth momentum. This was one of the SPAC IPOs a while ago, but they've really just kind of evolved very nicely since then. They got a banking charter in 2022. They've really expanded rapidly there. They're growing very fast. Their profitability is improving very quickly. And the brand name is really just kind of hitting an inflection point when it comes to being mainstream recognized. So I'm very, very bullish on this one going forward. Number 5, and now we're getting into my larger positions. Number 5 is Berkshire Hathaway. Ticker symbol is BRK-B. I do not own the A shares that cost $700,000 each. I own the B shares. This is a company that doesn't need that much of an introduction. It's the Warren Buffett-led conglomerate. They have about 60 wholly owned businesses. They have a large stock portfolio. It's mostly recession-resistant businesses. The leadership's fantastic, and not just Warren Buffett, who is stepping down at the end of the year. And they have just unmatched financial flexibility, almost $350 billion of cash sitting on the balance sheet. No other company has that much money to deploy. So really interesting still at this level. Number 4 is Pinterest. Ticker symbol is PINS. Now, they're the social media platform. They're a discovery platform. They have more than 500 million active users. Monetization, in my view, is still in the relatively early stages, especially internationally, where most of their user base is. And that user base is growing at a double-digit pace after kind of stalling after the pandemic. So a lot to like about this platform. I think the new CEO is doing a great job. Number 3 is General Motors, GM. Numbers 3, 4, and 5 are pretty close in size, I will also say. GM, they're the large automaker. Everyone knows who they are. The EV business and autonomous operations are growing pretty fast. The EV momentum is really impressive. Pretty quickly, they became the number 2 seller of EVs in the United States. They're not going to overtake Tesla anytime soon, but that's pretty impressive when they consider how many other companies are ramping up their EV strategies. The proprietary battery technology is a nice advantage. I believe that tariff fears are kind of overblown from a long-term standpoint here, and they're buying back stock hand over fist. It trades at a very cheap valuation of less than 6 times forward earnings. So a lot to like about GM as a deep value play. Number 2, Realty Income, one that I've talked about many times. It's a real estate investment trust. It has more than 15,600 net lease properties, which essentially means freestanding, like single-tenant properties. Great track record of steady growth in a variety of economic climates. It has underperformed in the past decade or so due to interest rate headwinds, but it is trading for its lowest price to funds from operations, the real estate version of earnings, and at its highest dividend yield since the financial crisis era. It looks like a great time to get in right now. I've added to it recently, and is one of my favorite stocks right now. And number 1 by a significant margin right now is Mercado Libre. Ticker symbol is MELI. And really, this is my biggest position because it's done so well. I did not pay that much per share, but I acquired shares, a few years ago. This is a commerce platform in Latin America. They have an e-commerce marketplace. They're considered the Amazon of Latin America in a lot of ways. They also have a financial services business, Mercado Pago, that has credit services and things like that. That whole business is growing great, but there are several opportunities in particular that are particularly massive for this company. The credit business, particularly credit cards, the Meli Plus subscription service, which is kind of like an Amazon Prime equivalent, the ad platform, which they just rolled out their new app for smart TVs. So there's a whole new ad opportunity there. There's a lot to like about this. I don't think they're done growing yet, and they are my largest investment. So I love to hear what you think about these. Which ones would you never have in your top 10? Which do you love? I'll do my best to respond to any comments or questions individually. Thanks for watching, and stay tuned right now for a message from The Motley Fool. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.